Just wanted to give a very, very warm welcome from Homegrown and our fabulous club. My name is Jessica. I look after marketing and comms here in the club. We've got Daniela, who I know some of you have met. But yeah, it's been absolutely brilliant working on this project and obviously bringing together these wonderful people together. But a bit about the club. We are a private members club for entrepreneurs and investors. I know some of you have been here before, so nice to see a few return faces. And we have got our beautiful club down the road as well, Home House, a bit more lifestyle focused. But no, we've been working on a few events together, and this is the first one that we've really worked together, brought together our members and obviously your community as well. So looking forward to tonight. You have got a little voucher as well to return back. So if you'd like to see the space, not at an event, use the club, you're very welcome to. And just find out a bit more about who we are. I am now going to hand over to the wonderful Camilla, who's going to do a bit more of an intro, and hopefully the mic will work. It sounds all right. Thank you, Camilla.
Thank you so much, Jessica. So hello, everybody. We're so happy to have so many wonderful women in a room. We wanted to do something a little bit different rather than a recruitment event. Although, recruitment is huge for us. Mary and I, we've been discussing how important it is to get women on the top and becoming leaders of major corporations. And for us specifically, financial services, M&A, corp dev, investor relations, and tech are sectors that we see there's so much potential to get some, pretty ladies around the room to discuss about things that maybe we don't have a lot of room to talk about. So today, instead of just tackling recruitment and opportunities, we wanted to talk about deal flow, how to navigate this very challenging environment. I guess when Mary and we put together this agenda, I know nothing that happened last week was in the books for us. So it adds a little bit of more adrenaline to it. But we're going to navigate a little bit about that and how we, as part of the process of due diligence and a law firm, see the market and how trends are happening and whatnot. And then we would like to invite you all to kind of bring your inputs as well. It's much more to be a fire chat and a conversation rather than just a panel. So feel free to just raise your hand and then we'll just handle the mic. I'm Camilla. I'm the head of Avalia Systems, which is a tech due diligence firm. So we don't have a software that is a VDR. We actually audit software. And we do very bespoke solutions for various stages of the business. We can come very early on a pre-due diligence. We help on the DD, but also afterwards. So if you do an investment, but you want to know, how do I make my first 100 days easy? Because I know there are going to be hurdles on the PMI. Then just give us a call and we can work with you guys.
Thanks, Camilla. And I'm Mari Bates. I'm a partner in the corporate team at Farr & Co. So we work with businesses, private businesses, investors, entrepreneurs and founders in the full suite of corporate advice. So we help businesses and investors from startup phase and raising investment and right through to exit and everything in between really. So a lot of advice in when you're running your business around governance and preparing businesses for sale. Our sort of bread and butter, I suppose, is M&A. So helping businesses in that process when you finally reach your exit and making sure you maximise value, making sure the process runs really smoothly, and that's what we'll talk about a little bit tonight. So just a little bit of personal background. So before joining Farrers, I was at Slaughter May for 10 years, and where I really focused on sort of large public M&A. And then decided actually I really liked working with the individuals and the decision makers, and decided to work for Farrers, where we work more with the sort of individuals, being able to give more strategic advice rather than a lot of sort of execution of large deals. So our sort of real sweet spot is the sort of privately held, closely held businesses, what we call it, where the founders are still very involved. We really help them from the point when they're raising investment right through to thinking right ahead, succession planning. What do I do once I do exit? Or if I'm not going to exit, how are we going to help the rest of the family integrate themselves into the business? How do I hand the business over? So lots that we can talk about definitely in the tech space tonight. So thanks, Camilla.
So I guess we'll jump right into, because I understand that for the past 2 years, we've seen a shift in the market when it comes to tech. We've seen 2021 being a very outlier year. And now we see it downwards when it comes to M&A, but fundraising rounds as well. But I would like to say that we're coming back to normal, or pre-pandemic or 2020 sort of valuations, pricing. But also we see that investment firms and companies are being more, I guess, cautious with the due diligences, because we're seeing things being so expedited on the past year. And then I was wondering if you could, Mary, dive deep into this, and then tell us from your client's perspective, how has it been when it comes to the latest deals and the ones that we've done, say, a year ago?
Yeah, so I mean, it's interesting to reflect, isn't it, a little bit about what is the current environment we're in, because actually so much is, everything moves so quickly now. So 2021 was really quite intense, and then we're in a very different environment now. One useful sort of nugget I thought was that one of the 2022 Collins Dictionary Words of the Year was permacrisis, and which is a sustained period of instability, and and we know what it means just by hearing the word. We've all been living it, haven't we? So just when we think we're coming out of a global pandemic, we're thrown into a war in Europe, an energy crunch, cost of living crisis. I mean, it's just one thing after another. In the UK, there's strikes, in Europe, there's strikes. So businesses are really having to find some resilience, and that it's a case study of all these things that you think about. What impacts an M&A market, and they're all happening. It's which is quite different actually to 2008, where that was a banking crisis, which actually halted a lot because there was no money moving. Now this is actually quite different. It's not, well, actually let's come on to the weekend later, but potentially when I was first thinking about this, I was thinking this isn't a financial crisis. It's it's not a crisis that's been created by the financial markets. It's actually it's it's coming at us from every single angle. And so understandably, actually, we did see a slowdown in M&A last year. It's a slowdown compared with actually quite a unprecedented period, especially in sort of tech M&A, because I think any of us who were in M&A would have really been working quite hard 2020, 2021. So it was a noticeable drop. And if you look at any of the statistics, actually there's some big tech deals which sort of distort the figures, like Twitter, but actually tech deals in general did sort of slow down. And I think actually what's happening is there's businesses are realizing they have to be resilient, because actually you can't just wait for this crisis to pass over, because there's just so much happening. And actually there's been a slowdown, but do you know what? PE funds need to spend their money. There's this word that loads of you would have heard as well. These words, dry powder. I mean, I keep hearing them. So actually, I should confess that I've actually was on maternity leave last year, and since I've come back this year, everyone keeps talking about dry powder. And so and at some point it will need to be deployed. So the private equity funds will come under pressure, and they are still interested in tech, especially around software. But there's a real interest in tech. Strategic investments will still happen. You can't just wait for a better time for M&A if markets are just not moving along. And so and actually businesses are starting to realize things like inflation, interest rates. There's a little bit more visibility on where those are going. So that was all part of the shock last year, but actually, okay, take stock. Okay, what's going to happen there? I think people have a bit more, that there's not the fear that the interest rates are going to keep going. There's a little bit more comfort that inflation will stabilise. So I feel optimistic about this year. I mean, it's still been, I'd say, it's still, we're not all flying out of the stocks this year, but it's, there are deals to be done. If you're seeking investment, there are investors out there who need to spend money, and they will do it for the right businesses.
Yeah, I guess I wouldn't add anything to that, because we're very optimistic as well, because we see that in uncertain times like this, there's a lot of opportunity And, in a way, we've seen a lot of buyouts happening. I mean, not so much lately, but, over the past 6 months, we see lots of opportunities out there, but also for very resilient businesses that maybe weren't as attractive because they weren't on the mindset of triple, triple, double, double. But they're very resilient. They make money. They have good revenue cash. And then, now they're, the private equity's the unicorn at the moment, right? So they all want a very healthy business. And then so for us, it's been quite interesting, like you said, Mary, to work with tech companies that they're now they see the opportunity of maybe an exit that maybe, succession, or because they see, well, I need to outgrow myself. I can't really do it in-house. Maybe partnering up with a bigger player or a competitor or whatnot to kind of join forces and go to the market and then have a better positioning. It's being an opportunity for them on the sell side. And on the buy side, we see a lot of funds and firms also being very active. Perhaps now they're dragging a little bit in the negotiation. So they want to make sure that they nailed that company. Is it for me? Because they have a lot of dry powder, but they don't want to fundraise again because it's uncertain times. So that money needs to be deployed at some point. But they want to make sure that they're putting it on the right businesses. Rather, if you look at a year ago, it was like, well, there's so much money, right? So let's just, diversify the portfolio and see one of them for sure is going to be a successful business. So we see more resilience, I guess, as well in times like this, which is very positive for us, specifically because we work in parts of the process. So it's very good to see that they're spending a lot of time in that. And then obviously we see for us in Tech DD, we see a lot of companies being so aware of data privacy, cybersecurity, which is something that they would just like scrape that. I just want to move forward with the deal and then let's do it, expedite 10 days, and so now it's been quite interesting to see that. And then from a sell side perspective, it would be interesting to hear from you. What can those firms and companies do to make a better process? Because we know that because we're in the middle of the transaction, many times things happen we need to do this to yesterday pretty much. So just get it done. But that's something that happens that could be even specific parts of the process or announced or whatever that founders didn't really figure it out before they went to the market. What do you think it would be a good process to do?
Yeah, well, I guess preparation is key actually. There's two things I think will be useful to sort of talk to you about. It's about the run up. What can you do beforehand, and then maybe we can talk about once we're in the deal process itself. Yeah. How can we help you run it smoothly? But I think definitely in times like this, all those things you've said are absolutely what we experience at Camilla. Where there's more caution in terms of the sorts of businesses that people are investing in, and the deals that actually complete, and it's sort of it's got to be a financially sound business. Actually, I think those are the ones. Or we are starting to see distressed sales as well. So putting aside the sort of distressed sales that sadly there are more of. The deals that are going through are the ones that where the financials have good track record, where they're in profit now. Less of the sort of big tech deals pre-profit. When they've actually just got the bare bones, so I guess bear in mind that if that is what if you're looking for an exit, make sure that you're comfortable with your financial story. But there's quite a lot more in terms of looking at preparing yourself and maximizing your value. So I think absolute key is identifying where your value sits. Is it with your people? If it is, are you properly incentivizing them? Do you have great contracts with them? Is it in your IP? Is the IP protected? Does it sit with the company rather than with your employees or with your contractors? Data is so important, isn't it? You guys do a lot in this space, but data integrity, absolutely essential if your business is, regardless of your business is a data business, because it can cost your business a lot of money if you don't have that right, or if all your value sits in customer, your customer database, and there's lack of integrity in that. Then frankly, a buyer is going to come and kick the tires and say, okay, we're knocking off 10 million of valuation. So if that's where basically all businesses are data businesses in some shape or form these days. So that is pretty critical. And key contracts, are your key contracts robust? Do you know when they're going to be up for renewal? Really important thing we say to businesses, especially ones that are coming out of this sort of startup phase, coming out of sort of seed investment phase, and when you're really trying to sort of scale, make sure that you have a really good organisation of all your contracts, because again, a buyer, an investor is going to come and want to be able to get a snapshot of all of that. And you'll be amazed, how many businesses don't have that in place. And no one blames startups. Startups have so much to do at the beginning. You have to really focus on your business plan. You need to focus on getting your customers. There's no point thinking about exit when you're building a business. So it's not surprising that actually, people don't focus on these things. But actually, when you're looking to really professionalise, to look for that big bit of investment, look for that exit, then it's really important to get that right. And I suppose finally, sort of governance is something that adds value actually, especially if an expectation is that the management team are going to stay in the business after the exit. To be able to sell that story about your governance structure is really key. And actually, even just looking at SVP over the weekend, lots of reasons are being thrown at the reason for its collapse, but actually, one of the critical issues there was the governance was poor. I think there was a long period where they didn't have a chief risk officer, and so just reflect on that, and just think, is there any tension? Is it the right decision makers? Are there enough people challenging me in the boardroom? Because actually, it's really nice to be working with people who think the same, but actually that's where you get real sort of blind spots. And so, and a buyer isn't going to necessarily think the same. So make sure that, you've got the right sort of board composition or non-execs who are going to sort of challenge you. So that's what I would say is around preparation. I mean, before we go on to sort of deal process, is there anything you want to add, Camilla?
I guess from our perspective, that's one thing that was very interesting that you said, because we also, when we come in very early on a transaction, we look at things from a people, product, and process perspective. So it's, do you have the right people to put the right processes to impact your business? And nowadays, like you said, every business is a data business. And I think I would challenge everybody to think about what business is not tech business nowadays, right? Because even a hospital, if you have patients, there you go, you have their data, it's a tech business. If you have an old ERP, that's a liability. If you have one person who's your CTO or your head of tech or, your CSO, and they are the only person that has access to the source code, there you go, huge liability, right? What happens if this person leaves? I mean, if you don't have your IP registered or, so we come very early to see those things. And that's very interesting because investment readiness is everything, I would say, nowadays. It sets a tone also for your investor or your buyer to see how, as a unit, as a company, you are. And then we're seeing now more than ever, thank God, we're seeing companies being more aware of that and being like, well, yeah, I can't just be there. I can't just do an elevator pitch and then think that they will just put money on my company. That's not how it works anymore, right? Or if I have a PowerPoint presentation and that's it, it's not enough. And to be fair, it's good that's not enough, because businesses are not, paper houses. They need to sustain themselves in something, and tech nowadays is so important. I mean, we can talk a lot about cybersecurity or whatnot, but it's just so important in so many levels. So it's interesting that you said that you guys also, because we liaise a lot with law firms when we come into the DD at the same time. And we raise those points as well, like, well, those guys are all contractors. I mean, what happens if they just are getting access to the code and just build another company? I mean, right? So then those points are so important actually to be raised at a very early stage, isn't it?
Oh, completely. And actually, I guess this concept of IP is actually not always clear, because there are things that you can register, registerable IP. There's so much unregisterable IP in so many of these businesses. How are you protecting that? And have you even identified it? I mean, one of the things our IP team help some businesses with is actually just trying to map that out. Where does your value lie? What is it in? What is your intangible? What are your intangible assets? Because a lot of it sits in people's heads.
Yeah.
So, I think really trying to understand that from a business perspective is really useful and actually will add value. And any buyer who's coming in and looking to your business will definitely think, will ask you that question. So yeah, absolutely, that's a big part of, especially with tech businesses, of sort of creating value. I guess now just sort of thinking ahead to sort of planning for the deal then. So that's sort of just getting your house in order and you should start thinking about, well, you should, as soon as you have headspace as a founder, once you feel like your business is sort of, ticking along, you should be doing it anyway. But, we generally say 18 months ahead of a sort of big investment round or an exit, you should be just really focusing on this. So I think, the next thing is your team. So firstly, your internal team, who are you bringing in? Because remember, these people have a day job as well. So, and also you don't want people to be distracted. So you don't want to tell everyone you're planning for these things, but it takes up a lot of time to start planning for a sale. So just think strategically, okay, who needs to be involved? Who will, at what stage do I bring them in? So, anyway, the finance director will always have to be involved, or the CFO, you will have to involve them quite early on. They'll have, access to a lot of the documents. To the extent you have a legal team, you'll probably want to bring them in. But you don't get people distracted. The rest of the team, they don't need to be involved. You probably, shouldn't. The other thing is how you're incentivizing those people who are in the process. Is going to take up a lot of time on top of their day job. You don't want them to drop the ball on their day job because that will impact value. So you need, and yet they'll be putting in extra time. So are there sort of transaction bonuses you need to think about for the individuals, or is the transaction itself going to be an incentivization for them? Are they going to be rolling in? If there's a buyer, do they get some management options or shares as part of that process? So people are at the heart of the process. It's going to be a really intense period for everyone. So make sure that you've got a sort of happy ship with you. So that's your internal team. There's the question then about your external team. Who's going to help you and what sort of diligence. I'm thinking sales side at the moment. What sort of diligence are you going to need to do on your business before you approach potential buyers? Do you need a corporate finance advisor? Do you need DD advisors? Do you need lawyers? And actually, you don't need to bring everyone in too early. What I would say though is, it's worth thinking strategically about, when you do involve a corporate finance house, they'll have some great ideas, they'll have some good tips. A lot of them will be happy to talk to you before there's there's any sort of contractual relationship. So do think about taking advice. A lot of people are very experienced out there. Even a lot of lawyers, that we have quite a lot of scenarios where people come to us after heads of terms are signed. Actually, a lot of law firms will be happy to talk to you. Set a fixed budget or whatever for some really initial conversations, just because actually that initial period where you're sort of brokering a deal, and you might find that actually you sign a heads of terms and then you're being advised, oh, that term won't really help you, and you have to reopen things, and it could create tension as the deal progresses. Because actually in this climate, I think momentum is the most important thing in making a deal execute. When the M&A market's really on a high, it's sort of the execution risk is quite low, but right now they're really going to kick the tires on the DD. So make sure the whole process runs smoothly. Make sure you're not reopening negotiation points later on. Make sure that you get the advice early on, and make sure you're ready. So getting that data room ready. It sort of depends. I mean, every sale process is different. So an auction will be very different to a bilateral agreement where you've got a buyer who's particularly interested in your business. But you don't want to be putting in anything there that will break that momentum, because buyers are a bit more nervy at the moment anyway. I don't know if you've found that as well.
I think you don't want to send mixed signals as well, right? So you don't want to raise
this, actually.
you don't want to raise any red flags. So just for us, every time that we assess potential transaction and whatnot, we usually just tell people don't wait 3 days until you answer this email, right? Because you actually need to keep it going. I mean, so getting a VGR ready and then getting all your assessments, all your documents, and making sure that you're set to go, it's so important, right? And it sets the tone as well, not only for the realm, but for individuals. And if you're actually negotiating a position at the company, it's so important because that's the first impression it's called first impression for a reason, why you're never going to get a second impression the same way from a buyer. And that's so important nowadays because that sets how the relationship is going to be, and potentially a months and months of relationship with the buyer until the deal actually closes. So that's we've been seeing quite a lot of that as well.
Yeah, and I think this is why actually the work you put in at the outset is really important, because it's not just about presenting your VDR, your virtual data room. It's about thinking strategically about what information are you releasing when. You know, are there any difficult stories that you need to position? You need to think about when's the right time to tell them. That, you know, things that go to value. Are there any issues that need to be resolved? Well, do as many of those as you can before for a start. But you know, so get all your paperwork in place first. But you know, sometimes it's not always possible. It's things like, are there any parts of the business that you think you need to sell off or hive out? You know, things that so that you're packaging things up ahead of time. Because that preparation will really serve you well in these times. Yeah,
and I guess that's a very good exercise as well for the strategy they're going forward, because it could change everything. Like you said, you know, even for different types of investors, they want to see different things. So then when you set up your information, your VDR or whatnot, you need to make sure that you're sending the exact documents to tell the story that you want to tell to every single one of them. So many times what we see is that whenever we assist clients with the Q&As for tech, one client wants to see a lot more about, for us, a client is the buy side usually. I mean, we do internal assessments for companies, but usually the buy side comes in and they're like, well, I want to see scalability on this one. And then so what we see that's quite interesting from the buy side now is that they're connecting the dots in between financial elements and then tech elements, right? So we got one private equity firm coming to us and being like, I need you guys to assess this firm because they have 30% EBITDA margin, very niche company. Why aren't they expanding? Is it because of tech? I mean, do they have the tech, what it takes to scale? Is it going to be a problem? If I'm buying a large portion of this company, I want to make sure that I know everything that's on the table. So just go there, you know, dive deep into it and then just let me know, because I'll do obviously the connection. I mean, him as a buy side, as a fund, they'll do the connection of the financials, but they needed to know a little bit more about what's in there. So that's been quite interesting because I would say that I haven't seen funds being so informed when it comes to tech, and then having tech inside of the funds as well to kind of have an assessment, or even if it's just one person, it just speaks volumes to have someone in there, because they're not necessarily obliged to have the knowledge of technology, if anything, but it helps so much when they do, because it impacts revenue straight away, right?
Absolutely. And you know, I mean, I've spoken to a couple of people here who are in the process where they're looking for investment, and I mean, actually, if some of that's going to come from VC or private equity, actually not all of them are tech literate. Don't make that assumption. So you really
and that's okay.
And that's okay. I mean, I really am not personally. I'm not. You know, I do a lot of work with tech businesses, and you know, and I don't have that knowledge. So you need to be able to sell that product, your business, in a way that they're going to understand it, in a way that tells them the growth story that is still possible. I mean, you know, most businesses won't wanting to getting that investment when they've reached their end of that journey. You're wanting the investment to scale up. So what is, as you say, what is the scalability, and how are you going to explain that to them? And you know, some of them are getting a lot more savvy. They'll have the relevant technology in house, or they'll use services like Camilla's. But you know, you need to be able to convince these the finance people as to, you know, what's the story. You know, why is my business credible, and how do I demonstrate that through the information I'm presenting to you.
Well, yeah, I guess specifically now in a world that everybody's using ChatGPT, so then they could just go there and then, you know, go like, what is this tech stack of this company? Give me benchmarks, and then they would just make sure that this is the information that they get. So, you know, you're the one responsible for the information that you're sharing with these people, and you need to make sure that if they're interested, if they're slightly interested, just make sure that you make it super clear. They show that this is your advantage. if tech is what leverages your company, make sure that you do your homework as well, because like Mary said, it's not their obligation to know everything about tech. And many times, to be fair, even the management of companies, they have no clue. Tech, I like to say, is still a black box. It is still a little bit like marketing was 5 years ago, that, a CFO would be like, oh, you're just spending money on, ads. What's that going to give us, right? And now look at them. And now that's the same that we see. So we like to see more people being the middle piece in between a CTO and a CBO, or someone that's going to help. These poor guys in tech, they don't have a lot of communication skills sometimes to just go in and be like, we need more budget. And then, why? Because it's not like hiring 50 more devs. That's not going to save the world, to be fair. Yeah. One of the things that we at Avalia, we were talking about like a couple months ago, remember when the big techs were laying off like 20% of their people? What happens is that many times when they do that, productivity doesn't decrease, right? And why is that? It's because they have a lot of technical debt. Maybe they had redundant codes. So in a way, it's not like hiring a lot of people, which is something that's an older mindset, I would say, from financial or financialist funds, right? They think like, well, you just improve your team and then you should be good to go. But that's not really how it works with tech. So that's something to, bear in mind when you put on your pitch deck as well. Like, I'm going to double my team. I mean, is it really feasible? I mean, do you need to, lay off these people afterwards? Because it's a reputational risk as well, right? So,
completely. Yeah, and actually, it's a good time for tech still, isn't it? I mean, even this sort of reaction to SVB, the government was really quite concerned about ensuring the buyer was found, and there was a real scramble, certainly in the UK, to make sure that tech businesses were not sort of left flailing. So, UK government is absolutely backing tech. So, if you're in that position now as a tech business, you are still seen as a viable investment. So it's part of riding that wave, but selling your story, because actually, unfortunately, I think historically, there are a lot of businesses that had a good story, but the financials didn't actually deliver, or the scalability didn't deliver. So now there's more robust testing of that story and making sure that it is going to deliver. Yeah,
I guess the financials kind of show the story as well, right? So you kind of build your storyline on top of that, which is great, because I mean, it's a shift in the market that is I think it's needed, because when I used to work for IB, I saw so many great people that were huge storytellers. But then you will look at their business model, you go like, oh, I can't believe this is just like a Frankenstein. I mean, this guy has lots of APIs, it doesn't stick. And now you see that the guys that are actually putting the work, that spent years and years building a very solid business, it's their time to shine, and it's more than fair, I would say.
Yeah, absolutely. But don't wait too late.
Yeah,
because
don't wait too late.
That journey.
The timing.
The timing is actually really important. Don't do it when do it at the point where it's really there to grow, and it's tempting, isn't it, when the M&A market's not offering you the multiples that you might get if people are just sort of riding that wave. And actually I'm pretty sure a lot of businesses, tech businesses especially, they don't need to sell right now. They probably won't, but if it is the right time, then and if your business is viable, then there are going to be buyers. There are going to be people interested in investing. So, there's no one solution. Every business is going to have the right time for itself. But, the right business will find a buyer.
Oh, yeah. I think to conclude on that, for what we see a lot right now is that 2021 is not going to come back anytime soon. Those multiples are not going to be, let's be realistic, right? I mean, there has been an adjustment in the pricing, and now the VCs that have seen like, oh, this is so overpriced. What we tell the founders many times when we do sell side M&A is like, what would you do if you got like a 100 million pounds check today? What would you do with that money? Because sometimes it's just like, they don't know. They just choke. They go like, well, I have no idea. It's so much money that they don't know. But that's what was being presented like a year ago to many ideas, many early stage businesses, right? On the understanding that they would deliver. And obviously they didn't, because they weren't prepared for that. So money is also a problem many times. So if you're not ready to raise, don't raise. I mean, that's the best advice that I would give. Just like, it's okay to just grow flat or just grow a little bit, but grow solid for a moment, because there are private equity firms and venture capitals, but also many competitors they might look at you as like, you're just the cherry I need on top of my sundae, right? And that's great, because it could be like that. It doesn't have
completely.
to be a VC firm.
You've absolutely got to find the right buyer for you, or the investor for you. I mean, yes, the cash is ultimately king. It's, you know, if your business needs the funding, you need the funding, but getting that right investor is so important. So, you know, actually, do you want to be? Are you comfortable with letting PE come in, take quite a lot of control? I mean, do not underestimate the level of control they will expect,
and the level of scrutiny as well, right?
A lot of scrutiny, but they will bring value if it's the right one. They will bring value. So you need to. I mean, it's a two-way street actually. That they don't just do diligence on you as a seller or as a company. You know, you need to diligence the investor. Do they have the right ethos? You know, do you have a common vision? What are they selling to you as the vision? Assuming, you know, you're staying in the business, which, you know, usually if it's PE, then they absolutely will be expecting the management team to stay. So pick your investor carefully. Or actually, do you find synergies with another business that's doing something similar but not quite the same? You know, actually, is that the better route for you? Is it a trade buyer? So it is a two-way street. And that diligence is really important, because if you don't get it right, relationships do break down. And we've probably both seen that happen.
Yeah, I mean, I would say double down on that, because I guess for us, we used to tell founders, like, why are you so quiet on those meetings, right? They're asking you all those questions. Ask them back. Like, what do you bring to the table, right? Because I'm bringing this. What do you bring to the table? I want to know, is it smart capital? What smart capital means? I mean, are you going to introduce me to people? Who are the people are you introducing me to? Right? I want to enter this market. Can you help me with that? I mean, be blunt as well with what you put on the table, because that's going to show from the VC as well, because it's expectations, right? Because they're different from angel investors. It's not their own money. They need to actually, they have other people that are believing in them to deliver what they promise in terms of returns. So they bring external cash to the table, and they're representing those institutional investors or high net worth individuals or whatever it is that they have as their funds structure. But just be honest with what you want, and then make sure that you do your duty. But as well, I mean, we've seen a lot of interesting companies, like big tech companies. They're mapping the whole market. They know what's happening. They know, even if it's just like a pre-seed firm or someone that they've seen pitch one time, if it's interesting for them, they will follow you, right? They'll put you on the radar. And that's also a very interesting alternative for someone who wants to maybe find an exit, say 2, 3, 5 years down the road, to find that what is that one thing that your competitor does very bad that you can kind of excel, and then maybe you can sell to them, right? Maybe you can sell to a PE, or you can be invested by a PE, and this PE will see that guy as a potential exit, right? Which is something that they do very often as well.
Absolutely. Like, big banks are massively investing in fintech, or, obviously Google are trying to buy anything that they think supplement any tech business that might compete, disrupt, So I mean, there are big buyers out there who will see a solution that either scares them that they think could compete, or they just think that's really going to add value to our proposition. And actually, especially in like fintech, actually the big banks are really going to help you scale. So that's a perfect example actually, where your product, your software has to have that scalability. Potential investors and buyers are really, really interesting. And actually, I mean, just coming back to that sort of gap in valuation expectation, I mean, there are ways of sort of bridging that gap. So, if now is the right time, but you're not getting that valuation that you think you might have got a couple of years ago, there are ways you can structure it. So you can either have some of the valuation, the acquisition price either deferred, or earn out is the classic way of sort of trying to bridge that gap. So you agreeing to stay on for 2 years, if you reach certain levels of, usually it's sort of profit driven, profitability, then you get an extra, effectively, extra cash bonus on that, or extra value for your sales. So there are ways of sort of structuring it so you can, there's this sort of day one price, but you sort of just push some of that out.
Yeah, and I guess we're not going to bore you guys to death I guess final maybe comments. What would you say, Mary, for someone who's actually either, I guess we can say, because we have a mix between buy side and sell side in the room.
Yeah.
So I mean, for a little bit of both, what would you say are the key things to keep an eye on?
I mean, I would say it's don't be scared by the fact it is a challenging time. I think it is a challenging time for businesses, for investors and businesses seeking investment or seeking an exit. But this is an opportunity, actually. For buyers, it's an opportunity because other buyers just might not be in the market. So if you see the right fit, then it could be a good time. So don't be scared off by that. But as sellers or businesses needing investment, use this time. Actually, don't get caught up in the frenzy. There's a lot you can do to create value right now, and actually don't get sort of rushed into a sale like in a frenzy, because actually everyone's taking a bit more time. Use that time, use it wisely. And just the most important thing is identify where value is in your business and make sure you double down on that, because that is what your buyers are going to be looking for, investors will be looking for.
Yeah, I guess that's key. And then I guess would you like to leave a message for people needing great lawyers in London?
Absolutely. No, well, as I said, actually do, and this sounds so cynical, but but actually getting your lawyers involved at the right time is really key. Loads of you will already be working with lawyers, and they will all be, I'm sure, really happy to have a chat with you at an early stage. Just or if you just want to sort of knock some ideas around, they're going to be happy to do that. So when you're literally starting to think terms, or even before, actually, when you're thinking about planning, or just ask about government, things like, oh, what do you think about our governance structure, or this contract, key customer contracts coming to an end, what do you think I should do about it? Just once you've identified that key area of value, there probably is a legal element to it. I'm not sorry to say so. So yeah, don't sort of be scared about that. I think the even that adds value. So do get advice. A lot of people have been through the process lots of times, whereas I appreciate a lot of the time founders, it's the first time, it's sometimes the only time you're going to be involved in an M&A deal. It's quite daunting. So have a chat with people, speak to a few actually as well, unless you've already got lawyers you're happy with. Find ones that are the right fit, because when you're really in that transaction period, you spend a lot of time talking to them. And it's really nice when you find that right fit with an advisor, because it just becomes so much more than your lawyer. I mean, you really develop a real sense of trust there. Find a lawyer who's prepared to give a view, not just identify problems, really think about solutions. I think and talk to them before you engage them, and just see if you're getting that sense from them.
Yeah, and then I guess because I kind of need to talk about Vadia, thank you guys so much for coming. I mean, thank you, Mary, for accepting the invitation. Okay. I mean, we are open to, like I said before, I mean, we do very bespoke businesses assessments that could be internal assessments. So before I actually go for an acquisition, if you want to know, I mean, I want to know where having house, I have no idea, or my team does DD, but I want someone to give it another look. Just reach out to us. We're more than happy to do that. We're very new in the UK, but we've been working with businesses all over the globe. We've done more than a couple hundred assessments. Although we're a very small team, we have a very wide net of experts. We have around 200 people around our table with various expertise in various tech stacks and whatnot. We can also just hop on a call if you want to know. I don't want to pre-due diligence. I'm very early stage, but I kind of want to know what doesn't smell very right. I just had a conversation with this founder, or I'm on the middle of a deal. I just want to know what's happening. I mean, just give us a shout and we'll be more than happy to help you. Hopefully you enjoy the food and maybe your day at the club as well.
Is there time for questions?
Yeah, and I wanted to open for questions. I mean, if you guys have any inputs, if you want to talk about your end, that being private equity companies or whatever.
Yeah, I'd love to hear an investor view as well, actually.
I have a quick question.
Okay.
In your respective work, have you started seeing the transaction volume picking up this year? And
Mm.
if you do, in which sector or in which area you see basically
Do you want to go for that one?
I'll go first. Yeah, it's starting to pick up. I mean, it definitely slowed down second half of last year. We're starting to get more inquiries. Unfortunately, we are starting to hear a few more distressed
Mm.
transactions.
the buyers are basically getting a discount from the distressed assets.
Exactly.
So that volume is
Yeah, so businesses are coming to us with a potential insolvency issue arising. So yes, facing potential insolvency. So I suppose it'll be an insolvent sale.
same as yesterday, which
Yeah,
not-
exactly. Pound. Businesses being sold for a pound.
Pound.
Absolutely.
that type of thing.
Absolutely. So we are starting to see more of that. I think we are still seeing. Well, we work with a lot of investors on the buy side. We work with a lot of family offices, high net worth individuals, private capital investors. Now we have seen that they are still being quite opportunistic. So what are they interested in? Often they're interested. I mean, tech is definitely an area of interest because it's often things that are slightly like weird and wonderful that they are a bit passionate about. So we are we often get, and we are starting to get again, inquiries and sort of looking into sort of tech businesses that are looking to disrupt. I mean, this isn't really so relevant for this talk, but we're seeing those sort of purchasers being really interested still in real estate sector. And I guess there's actually a lot of tech in real estate.
Yeah.
The commercial, well, residential as well, but commercial, yeah. We'll still see it again because there's opportunity right now because there's the pound is still relatively cheap. UK real estate is still seen, commercial and resi is still seen as stable investments. I mean, UK business generally, I think, is still seen as a good place to invest. So I'd say those are the areas that so distressed, tech, and real estate are areas where we're getting inquiries, and obviously we only see a snapshot. It's very much sort of private capital rather than the public markets, but that's where we're tending to see inquiries.
Yeah, and I guess inside of tech, well, we've seen quite a lot. Fintech's also, I mean, great sector. There's a lot of opportunities to disrupt the market. InsurTech comes kind of like alongside with that. AI, anything machine learning AI is massive. That's what they want. And then when you go to specific businesses, I mean, we've seen a lot of actually hospitals trying to modernize their own databases, trying to acquire ERPs or bring solutions in-house or open their own innovation side of like sell. And logistics it's been quite huge also, specifically in the UK, right? Because the whole lorries logistics is still something to crack on. But we've seen quite a lot of that.
And do you feel like impact and ESG has been deprioritized because of the context?
I don't think so, actually. I think that's one thing everyone worries about. As soon as there's other crises going on, that these sort of positive things about doing business well drops off the radar. Actually, we haven't been seeing that necessarily. I think actually there's more of it. So because, going back to what we were saying about investors being more robust with their due diligence, actually PE funds especially are wanting to diligence elements of E, S, or G depending on which is the particular focus. Different investors will have different areas that they're particularly interested in. What we'll start seeing, looking at the public markets more, is coming into AGM season, where a real bulk of the UK PLCs are having their AGMs, and it's a time when shareholders really can hold the boards to account. Actually, I think Aviva came out with a statement the other day about that they intend to test the sort of robustness of statements being made by these PLCs around climate, especially. So actually, investors continue to care because again, it adds value. I think in the UK, it's still not as politicized as it is in somewhere like the US. I mean, the US, it's really dividing the business world. and there'll be real arguments as to whether it adds or devalue, adds value or devalues the business. But certainly, in the UK, I think there's still an acceptance that especially the good governance is a really important part of is a priority. So if that's a big focus of your business, then absolutely sell that story, because I think it's here to stay.
Yeah, and I guess also impact investors, they have a different timeline of how they run. It's they're in it for the long term. It's kind of like when you look at deep tech PEs and deep tech venture capital firms. You think about it, well, I might see a return in 10 years, right? So it's not like, well, I'm going to put money in this company and they're going to save the world in 2 years. That's not really how it works, right? So they have also a different timing. And then funny enough, I guess we spoke about that when ESG became a hot topic, the G was kind of like left out of it for some time. And then the past, I would say like a year, it has kind of like picked up a little bit. And now it's so important to have governance in place, right? Yeah. And even for public markets, I guess, anywhere you go, it's so important. So that's actually a good thing to see that, good, solid impact businesses are also very investable at the moment.
Yeah, absolutely agree.
Anyone else? No?
Sorry.
No.
I can make a comment, which I work for a strategic buyer, and we actually want businesses to be in good order, have everything lined up so that we can pay the right valuation for that company. We're not going in and looking at, look, can we find holes to pay a lower valuation?
Yeah.
I work for a listed company and we want things to be, mint. So if anyone is ever thinking about preparing, get the right advisors, do everything that you're saying, because that's what we want. I was on the other side of the deal at one point, and I remember thinking, they're looking for holes, and we are, because we have a responsibility to do that. But we're not looking for holes so that we can devalue. We're looking for holes so that we can make sure we shore it up and get it sorted after the deal closes. So anyway, just reinforcing what you said, really. I think it's great that there are women like you making sure that companies are pointed in the right direction and ready for a sale or whatever, investment, everything. Same thing.
But that's something quite interesting as well, because in tech DD, what we see many times that because the deals are dragging so long, I mean, not I guess primarily like 3-4 months ago, PEs were like, can you just drag it, just find something, just because we need to buy some time, just find something that we can just get some time out of it, because we need to, it's end of the year, we need to make sure that we're doing a good decision. We don't know what's going to look like 2023 and whatnot. They wanted us to do that. And funny enough, I mean, some of the companies that we were doing assessments, they saw it as a very good opportunity, because once we were done with the reports and we raised all the red flags and whatnot, they use it as a leverage to just go back to the investors or the buyers and be like, okay, listen, I know this is going to take a couple more months. I'm going to work on the things that those guys listed. We're going to fix it. And then by the end, so there's not going to be any penalty on the valuation, because I'll fix it. Right. And then you can come over and then do another assessment to make sure that I've covered it. And that actually is quite good, because it shows to the investor or the potential buyer that, they're putting in the work. Specifically, if you're a public listed company, there's a lot of scrutiny going on that right now, right? Because we were speaking about, I mean, for regulated businesses, it's business as usual, but we're seeing different parts of this in different segments, like aerospace, satellite businesses being more scrutinized as well. And that's, something that we haven't seen quite often.
And you know what, buyers don't, and I'm sure you'll back this up, but buyers don't want to buy a problem. They don't want to get it cheaper and then have to deal with a problem. They'd rather it be dealt with. So, if you identify a problem during DD, and it's quite possible you will, then it's much better to just say, okay, let's just sort it out first. We'll delay the deal by a month, but at least it's, it's dealt with. Another thing that often, comes up is, do I need to tell them about this thing? And, it's, I mean, yes, it's like that, basically. I mean, I won't bore you with the legals. It's buyer beware, they haven't asked a specific question. But, no one wants to go into this with like years of like litigation afterwards. Like, just be upfront about it, fix it. Because otherwise they're going to come after you. It depends on the circumstances. If you're seeking investment, then these are people you're going to have to work with. You know, so if it's not a full exit, you're going to have to work with these people. So you know that you've just got to be commercial as well, and rather than just think, oh, can I just legally get through this little gap?
And I guess don't postpone it until the last minute as well, right? Because then after you had all the conversations, now is not the time to sit and have that one conversation we've had.
I mean, it's fine if that's your strategy. I'm not gonna, it's not my decision as a lawyer to tell you what's the right time to do these things. It's my
that you have to do it.
I advise you what the implications might be, having seen it. And sometimes it is dropped at the last minute when you know the seller thinks, oh, they're never going to drop out at this stage, but you know, I'm going to drop this massive bomb, and that has happened.
But at the point, sometimes, you know, it's been so many months that you kind of like create a relationship with the buyer or the investor that you kind of feel less, I guess, threatened.
Yeah,
and
it sort of depends. I mean, I'm consciously talking for ages, but just one thing I would say is like deal dynamics is so interesting because, you know, I mean, we've got to respond to what our client wants. You know, some of our clients really want to be really aggressive, and they do, you know, and that might be right for that sale generally. But you know, I guess my general philosophy is that actually both parties are looking for the same outcome. Yeah, you know, the deals that, in my experience, have gone most smoothly is actually, do you know what, this guy wants this. This party wants to buy, this party wants to sell. Let's just, you know, make it go as smoothly as possible. Both sides want to do it really quickly. Let's be grown up about it. So, but that's not right for everyone either. So, you know, I mean, we're there to sort of facilitate what's right for our particular client. But yeah, really interesting actually. For those of you who are in M&A, I'm sure you agree it's it can be quite fun.
I guess we'll be around. We're also cautious of the time. There's going to be more food, network, because I guess, I mean, we like to connect amazing women with other amazing women. I hope that you enjoyed. We'll be sending out another form after this to everybody on the email. We'll send Anna's Seed of Colors deck and then other information for you guys. And then we are thinking about doing this maybe once a quarter. So if you guys want to get together and talk about business and not necessarily, I mean, girly stuff is also good, but not necessarily only girly stuff, financial matters, law, be my guest. Thank you so much for coming. Thank you, Mary, again.
No, pleasure. Thank you, everyone.